We have started YouTube live stream. Mr. Sujakund is here. Okay, fine. Yes, welcome, Mr. Anand. Welcome. Welcome.
Thanks a lot, sir.
Okay.
Good evening, everyone. Welcome you all in the third webinar of Observance of Banking Month, July 2021, organized by the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India in association and active involvement of other committees, regional councils and chapters of the Institute. Today's webinar is on the topic RegTech versus FinTech, the intersection of regulation and disruption in financial services. All the webinars will be streamed live through the official YouTube channel of the Institute to reach the students, members, and all stakeholders of the Institute. We are privileged to have today Shree Arijit Basu, former Managing Director, State Bank of India, CMA T.K. Venugopal, General Manager, Canara Bank, CMA Ranjit Kumar Mishra, Chief Credit and Risk Officer, Satya Micro Capital Limited, Sri Ashish Anand, Founder and CEO, World, as eminent guests of honor and speakers of this program. We are also having with us CMA Mohan Bhatia. He is Global Head of BFSI Risk and Compliance Consulting at Wipro Limited. CMA P. Raju Iyer, Vice President of the Institute of Cost Accountants of India. CMA Chittaranjan Chattopadhyay, Chairman BFSI Board of the Institute. A very warm welcome to all of you. Before we start this event, let us grace this occasion with the Institute anthem.
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय ॐ शान्ति शान्ति शान्ति.
I would now request CMA Chittaranjan Chattopadhyay, Chairman BFSI Board of the Institute, to give the welcome address.
Thank you, Indakshi.
Thank you.
Respected President CMA Bisru Basu in absentia, who is very much busy for one very important meeting. CMA, our Vice President CMA Raju Iyer will be joining very shortly. Our guest of honor, Sri Arijit Basu, former Managing Director of State Bank of India, CMA T.K. Venugopal, General Manager, Canara Bank, CMA Ranjit Kumar Mishra, Chief Credit and Risk Officer, Satya Micro Capital Limited, Sri Ashish Anand, Founder and CEO of WHRRL, CMA Mohan Bhatia, Consultant on FinTech, all my council colleagues of the Institute, regional council members, members of our chapters in India and overseas centers, all the participants representing various professionals, bodies, our members of the Institute in India and abroad, qualified CMAs, students, ladies and gentlemen. This is a great afternoon, rather evening, when we will be spending a beautiful, discourse, very knowledgeable discourse on RegTech versus FinTech, the intersection of regulation and disruption in financial services. COVID-19 pandemic still continues to keep the world on the edge. COVID-19 has led to significant structural and behavioral changes in the form of social distancing, drive for economic rejuvenations, and increasing regulatory and government interventions. These changes, such as disruptions of physical operations, impact on asset quality and liquidity, and demand pressure on digital channels, have posed challenges to financial institutions, especially the banking sector, also the insurance sector and financial service sector, across key functions. In view of the significance of the banking sector, I think there are some noises coming. I request everybody to please mute. Otherwise, noises are coming. In view of the significance of the banking sector in the Indian economy and to spread the awareness of various schemes in banking, especially during this pandemic period, it is felt that the Institute should observe July 2021 as the banking month. We hosted the first webinar on the topics, costing, is it panacea for improving NIM in banks? On 15 July 2021. Shree Shivam JK, Managing Director and CEO of Dhanalakshmi Bank, chief guest, he was the chief guest. Sri Madhav Kitsagar, Director and CEO, Contact Consulting was guest of honor. CMA BB Goel, former Additional Chief Advisor, Minister of Finance and Head of Indian Cost Accounting Service, graced the occasion. And Sri B. Rajkumar, former Executive Director of Indian Bank, advisor of BFSIB, he was also present, and they delved on the whole topics. Second webinar was panel discussions on the topics, 52nd year of nationalization, role of PSBs, impact on various sectors of economy and the society, way forward, post-consolidation. On 17 July 2021, it was held. Ms. Padmaja Chandru, Managing Director and Chief Executive Officer of Indian Bank, was the chief guest. CMA Mohan B. Taksale, former Chief Executive of Indian Banking Association, was moderator. The esteemed panelists were Sri Rohit Rishi, General Manager, Indian Bank; Sri D. Shivakumar Sharma, Chief General Manager, Union Bank of India; Sri S. Adikesavan, Chief General Manager, State Bank of India; Sri S. B. Singh, Chairman, Arjavat Gramin Bank. FSIB, with a view to develop competent and skilled resource pool for the banks, financial services, and insurance sectors, has been continuously putting its effort by way of conducting certificate courses, publication of periodicals, BFSI chronicles, and hosting update news on BFSI sector every day in its portal, organizing events amongst the bankers and CMAs. We have published a comprehensive handbook on MSME, which includes 360-degree view on MSME and delves on registration to restructuring, titled Yield Memory on Lending to Micro, Small, Medium Sector Enterprises, including restructuring of MSME credit. It has been a great acceptance from the various corners of the country. Entrepreneurs, bankers, they have simply hailed this book, and you will be very happy to note that we are also going for the supplementary edition on the wake of the various other restructuring package and various government's various decision and government's announcement on MSME sectors. We have been continuously upgrading this book. Year 2021-22 have been very eventful for the year and for the institute itself in general and BFSI in particular. April 20 was observed as MSME month. May 2021 was observed as agricultural month. June 21 was observed as insurance month, and July 21 is being observed as banking month. You will be happy to know that BFSI in association with NISM of SEBI will observe August 21 as investment management month for awareness on investment avenues, pros and cons on analysis of investment portfolio. Now coming to today's topics, RegTech versus FinTech, the intersection of regulation and disruption in financial services. It would be dealt by our learned speakers and guest of honors. I would not be delving on the very much, but let us tell why we have selected these topics in this particular month of July, because it is very much important that genesis is the 2008 global financial crisis, and this created the need of such requirement. FinTech has now today entered into a phase of rapid development marked by the proliferation of startups and other new entrants such as IT and e-commerce firms. The current scenario emphasizes the regulators must develop a robust new framework that promotes innovations and market confidence, aided by the use of regulatory sandboxes. The true requirement of RegTech lies in its ability to effect a profound transition from a know your customer to a know your data approach. And currently we are in a phase of FinTech 3.0, which acquired high levels of smartphone penetration and genuine sophistication regarding application of programming interfaces. RegTech 3.0, in which the technology will help us reconceptualize the finance and its regulation to build a better financial system. The long-standing marriage of technology and finance has been continuously evolving. FinTech today exhibit great promise in both emerging economies, where several underlying factors, rising smartphone penetration, inefficient traditional financial system, and behavioral shifts among consumers present fertile ground for FinTech development. These are all the key areas and developed economies where current investment in FinTech is increasing at a staggering pace. So it is our it is our ostensible duty from the Institute of Cost Accountants of India for the awareness of the people as a whole. And that's why we have thought that let us have one program like RegTech and FinTech, where our members, not only our members, our students, and other people, everybody has got access to this particular program, and we will be listening from our esteemed speakers. I welcome on behalf of the BFSI board to all the esteemed speakers, guest of honors in this particular program. And I am sure that when the question answer session will come, we shall have a lot many questions from ourselves, from our members, from the participants, and we shall be definitely have a very, very enjoyable session today. So I again convey my heartfelt thanks to everybody who are participating here and our guests of honor who have kindly been agreed to come over here amidst their very busy schedule in their professional life. Thank you.
Thank you so much, sir. I would request now CMEP Raju Iyer, Vice President of the Institute of Cost Accountants of India, to give his address.
Thank you, madam. Thank you, madam. Wishing everyone a happy and a healthy and a peaceful year. It's a very excellent topic. Respected our Honorable President CMA Visuru Basuji, Chairman for BFSA Board and Indirect Taxation Committee Chairman CMA Chitranan Chattopadhyaya, who is meticulously organizing various programs and releasing various technical papers and guidance to various members, which is helpful to all our members and the industry, and especially the bank and MSMEs also. And respected Chief Guest, Sri Harish Basuji, and Sri Vedugopalji, and Rajit Kumar Mishraji, and Anand, and CMA Mohan Bhatia, all are eminent speakers and eminent experts. Today's topic is very important because today we are going into the digital world, and where it will be giving us a plenty of scope and opportunity, where the industry in India will be progressing and the economy in nations will be progressing. To highlight that, over the past few years, financial institutions have partnered with Fintechs on various aspects of the business. While the principal focus was on the customer-facing areas, companies have now started developing attention to back-end aspects also, with a lot of pressure from regulators and overall data compliance and governance. RegTech, which is according to regulatory technology as a niche segment within the FinTech, that is financial technology ecosystems, have gained significance. The next few years could witness the FinTech partnership to tap the interesting use of cases. So this will be giving us plenty of opportunity. Our eminent speakers and the chief guests will be highlighting the issues and aspects and what are the opportunities, how we will be able to do it. I'm also very eager to listen from our resource persons and chief guests, which will be really value-adding to today's session. And to highlight that, as Chairman BFSC Committee Chitran Chattopadhyaya has pointed out, and the MSME month, a lot of responses from the people, and especially the micro, medium, and small industry associations have gained a lot, and our publication has been very much valuable to them. Same way in agriculture, we had a lot of discussion, and the Honorable Minister has also participated. We are bringing a handbook and we are bringing guidance on how the farmer's income can be doubled. And especially the banks and financial institutions have a greater role to play in MSMEs and agriculture sector, where the nation's progress and the GDP will be growing in a higher way. So thank you very much for the opportunity. Wishing everyone happy and healthy and peaceful days again. Thank you, thank you, thank you. Over to the organizer. Thank you.
Thank you so much, sir. I would like to introduce now our eminent guests of honor and speakers of this event, sharing their brief profile. Today we are having our guest of honor and speaker, Sri Arijit Basu, former Managing Director, State Bank of India. Sri Arijit Basu is a management leader and professional from the banking and financial services industry. He has worked in India, Japan, and the UK. He is currently chairman of HDB Financial Services Limited, a leading financial services firm and subsidiary of HDFC Bank Limited. He is also a senior advisor and consultant to leading firms like AZDP Partners, Deloitte India, and Life Insurance Corporation for their forthcoming IPO. He recently retired as a board member and managing director of India's largest bank, State Bank of India. Prior to that, he was the MD and CEO of SBI Life Insurance Company Limited, the largest private life insurance company in India. During his tenure in the company from 2014 to 2018, the company witnessed transformative growth and listed successfully in the stock exchanges. He has been associated with various committees. He is on the Academic Advisory Council of the College of Supervisors set up by RBI, was chairman of the working group on project finance set up by the Government of India for the infrastructure pipeline in 2020, and is chairman of the Banking and Finance Committee of the Indian Merchants Chamber, Mumbai. He is an honors graduate in economics and has done his master's in history from the University of Delhi. He is also a certified associate of the Indian Institute of Bankers. His main interests are in the areas of leadership and organizational excellence, corporate governance, and risk management and organizational culture. Welcome you, sir. Our next eminent guest of honor and speaker, CMA T.K. Venugopal, General Manager, Canara Bank, is a BCom CAIIB and Cost and Management Accountant by qualification and banker by profession. He joined bank in 1990 as a clerk and later as officer and worked in branches, specialized large credit branches and administrative offices in Hyderabad, Chennai, and Bangalore in various capacities. He is presently working as General Manager in Head Office, handling credit administration and monitoring wing. Another eminent guest of honor and speaker, CMA Ranjit Kumar Mishra, Chief Credit and Risk Officer, Satya Micro Capital Limited, is currently working with Satya Micro Capital Limited as Chief Credit and Risk Officer. He brings nearly 1.5 decades of experience leading financial services business risk functions across multiple products and formats like NBFC, HFC, banks, consulting, etc. into the lending, FinTech, and risk management domain. His prior professional association was with ART, HFC, ICRA Group, Polaris Software, R System International, and IndusInd Bank. During his career, he has worked in various geography, which includes India, United Kingdom, and Bangladesh. He graduated in Commerce, a member of the Institute of Cost Accountants of India, and studied from the Institute of Chartered Accountants of India. A very warm welcome, you, sir. Another guest of honor and speaker, Shree Ashish Anand, founder and CEO World. Shree Ashish Anand is founder of World, a blockchain-driven financial inclusion lending platform for farmers focused on warehouse receipt finance. An award-winning startup, World is globally the first application of blockchain in priority sector as well as agri-lending. India's largest blockchain platform, World, is present in 1,400 warehouses across India with transaction volume crossing rupees 5,000 crore on the platform. Before launching World, Ashish Sir co-founded Blockchain Advisory Council, a global platform for blockchain consultancy having more than 100 blockchain techies and functional consultants spread across 5 continents. In blockchain arena, Sir has provided business model and token model advisory to several business entities in verticals as varied as remittance, asset management, logistics, and GDPR verticals in Europe, Asia, and USA. He is also a member of Investment Advisory Board of Bull Token, Norway, and sits on Advisory Board of Social Pay, USA. Prior to wearing the tech entrepreneur hat, Ashish Sir, a qualified CA, has spent 15 years in consultancy space running a CFO on demand service for small and medium enterprises. As CFO on demand, he advised businesses on financial management, risk management, including forex and commodity risk management, management consultancy, fundraising, including debt raising, and IPO advisory. Very warm welcome you, sir. Sharing now the brief profile of CMA Mohan Bhatia, Global Head of BFSI Risk and Compliance Consulting, Wipro Limited. He has worked as Technology Risk Officer for Shinsei Bank, Tokyo, Japan. He is Global Head of BFSI Risk and Compliance Consulting at Wipro. He has 20 plus years of consulting and technology implementation experience with global banks in defining policies, processes, and technology systems. He has engaged and delivered consulting assignments for Chief Risk Officer, Chief Financial Officer, MLRO, Chief Compliance Officer, and Digital and Analytics Heads. He held leadership and management positions at Reserve Bank of India, leading IT organizations like Infosys, Oracle Financial Services Software Limited, Wipro Limited, Life Insurance Corporation of India, Institute of Actuaries of India. He has extensive experience of banking and insurance business, especially payment and settlement systems, regulatory guidelines, risk management and compliance, and technology initiatives. A recognized thought leader, internationally published author in banking and technology. Special invitee as risk management expert at Gyan Sangam 2015 and 2016, the conclave of CEOs of financial institutions organized by the Government of India, Ministry of Finance. He is a member of working group on certification at BIAN. He is leading AI and ML and data science initiatives for several BFSI firms. He has prepared background note for workshop on data sets related to banking systems in India for CAFRAL, Reserve Bank of India. He is an architect on digital and cloud, AI and ML, data science and analytics for banks. His key competencies include digital and cloud strategy and implementation, automation, ML and cognitive computing, modeling, data science and augmented analytics, financial risk management and regulatory reporting, accounting standards, performance measurement and finance, etc. He is a member of the Institute of Cost Accountants of India, Master of Science from Mumbai University, postgraduate diploma in software technology from Center for Development in Advanced Computing. It's a Government of India institute. Welcome you, sir. Welcome all of you. We are really honored to have such stalwarts under one platform. So I would now request CMA Mohun Bhatia sir to give the introduction of the theme.
Thanks. Thanks for this opportunity for today, and thanks everyone for joining us. So, if you look at what is happening in the technology industry and what is happening especially in the banking technology, the entire core banking systems implementation more or less was over by 2008 to 2010, and world over actually banks went and implemented mobile banking and internet banking. 95% of the transactions were actually migrated to mobile and internet banking by 2012 2014. But at that point of time, the systems, internal systems at the banks, they actually were fragmented and so on and so forth, and they actually were not able to go and migrate and move towards the agile or to digital or to the self-service, etc. So this is the time period where they went with the mobile, where they went with the internet banking, but their back office system was not in tune with the requirement of digital banking or in the requirement of the self-service and other things. So there was no industrialization as such. So this we can call it actually as a banking 3.0, which was happening in 2012, etc. So to take care of this, actually there was a wake-up call which was given by Fintechs, more or less starting from 2013-14, when we started having Fintechs world over, and we started seeing the disruption, etc. And the entire world, including the banking sector and regulators, they were actually taken aback, basically aback, saying that the disruption which actually these Fintechs were bringing, they actually were bringing disruption in terms of bringing the AI ML, getting into the digital, utilizing the public data set, and getting into the gray area where there was not much of the regulation, etc., which was there. So this is around 2014. We can call this actually area as the area of FinTech 1 or the FinTech first generation, etc. More or less at that time, 2014, we had this payments bank as well as the small finance bank committees, etc., working in India, and world over we actually started having digital banking and other things. So at that point of time, regulators actually were also taken so much aback that they were not knowing what to do, etc. But because of the high cost and other areas, specifically in the UK, where UK actually went into this entire payment transformation, etc., regulators actually they changed the track and they started actually welcoming, and they started having the light type of regulation, etc., for the fintechs to survive, and we got into this fintech 2.0. We can call it actually the time period between 2014 to 2018 or 2014 to 2020. At that point of time, regulators actually they were all for them, helping them, making them disruption, etc. At that time, regulators also discovered that if this type of things actually, that disruption which industrialization which can bring, or fintechs which actually are bringing, if that can also be applied to the regulatory requirement, because what is happening in 2014, if you look at that entire Basel started maturing, we started having BCBS 239, etc., and the cost of the regulation, etc., started going up everywhere, and then banks started talking to regulators that this is a very high cost thing, the regulatory requirement or BCBS 239 or traceability, etc., what you are asking for. So regulator actually started encouraging also the what we call it actually as a RegTech, where there can be a disruption, specifically disruption in the regulatory reporting, and what type of data and other things which regulators wanted, and so on and so forth. And specifically in UK, where it was also going transition, and we were talking about Brexit, etc., this entire thing was actually happening. But then we actually had started having this 2020, and we started having this the entire challenge on the end payment system, end payment IPO, which started happening. That is actually the third phase of we can call it actually as a fintech, where that regulators were going with the lightweight and all the encouragement, etc., what was happening in for the fintechs, etc. Now we started having a regulator change the track again, and now regulators have started looking at basically how we can have the level playing field, how fintechs can be partner for the disruption, and actually banks which actually were in the banking 3.0 have started moving into banking 4.0. This entire digitization actually has come because of the smartphone and other things in the everyone's hand. And this actually fintechs worked actually as a link between the banking 3.0 and banking 4.0, etc., and so on and so forth. And regulators have also now matured and changed. They look at India, the two committees have already worked on this innovation, etc. RBI has appointed innovation officer. They have actually gone and established sandbox. Even IRDA has established sandbox. SEBI has established sandbox. RBI has established sandbox, and so on and so forth. But also there are committees which actually are now talking about how do we bring level playing field, etc. So the next generation, the fourth generation fintech, which actually maybe starting from 2022 onwards, will be actually the benchmark for the banks, because banks are trying to get into the industrialization, what I call it actually in my book also I written it as the banking 4.0, the industrialized bank of tomorrow, etc., where fintechs actually are getting into as a partner. So when the regulators are also getting into the next generation, they are actually, you would have seen the news item yesterday, we are talking about digital currency to be issued by the banks, etc., to be issued by the central banks, etc. So they also want actually that disruption to happen. They want that disruption actually to come from their RegTech firms, FinTech firms, as well as the supervisory tax firms or the risk tech firms, etc. So they actually are enabling that environment, but going forward in the version in the fourth generation, they will more be working basically like a benchmark for the banks, and the equal partner for the banks, and level playing field, field for the banks. So considering this background, we actually have organized today's today's webinar, and we will actually request our esteemed speakers actually, and we will take this theme forward. I think I would request now our first speaker to make his remarks.
Sir, before that, I just want to tell that after the address of our guests of honor and speakers, I would request CMA Mohan Bhatia sir to moderate the question answer session from the participants and summing up the program. So, sir, now I would request Arijit sir to give your address, sir. Thank you, sir.
Thank you very much. First of all, thank you very much to the Institute of Cost Accountants for having invited me today in this seminar, and it's a very unique and good idea to have a month dedicated to a specific area of finance, and banking is, I understand, the July month. So all the dignitaries from ICAI, and special thanks to Mr. Chattopadhyay for having invited me, and all my co-speakers, and of course the audience. So what I'll try to do is, for all these subjects that we discuss, fintech, regulation tech, finance, banking, the audience is always interested, and they have obviously read up a little bit on their own, and they would know. So I always have felt that the best thing that one can do is to share some experiences that one has had or one has heard with the audience, so that they can think of those things, and how things can go forward. So the topic itself is very interesting. Regulation tech versus fintech. That versus itself set my mind thinking. Should it be versus, or should it be regulation tech and fintech? How does it collaborate? In fact, if you look at it, there is a third thing. So there is the fintech, there are the regulators, and the third box is actually the traditional financial institutions, which includes banks. And we have one banker on the panel. I am an ex-banker now, but we have existing banker, Mr. Venugopal, I saw on the panel. So it is basically the intersection of fintech, how fintechs would be regulated, as also an intersection that they will have with the existing financial institutions who also are regulated in a particular fashion, and kind of a Venn diagram, and how that will play out and give results, or is already giving results in various ways. So I think the first most interesting thing that I have seen, and in State Bank also I had the opportunity to be supervising, although we had the vertical head was the Chief Information Officer, who was actually responsible for IT, but I had, as the whole time member on the board, had the responsibility for overseeing IT. So there have been a lot of discussions that one has had with both fintechs as well as technology companies on how things are moving. Very interesting development is, if you go to the RBI site now, the RBI site itself on the first page, where they say what you can click to go deep under. So you can click press statement, what's new. One of the items is fintech. So that is, and this is a very new development. I think I went to the RBI site yesterday, and the previous visit I had not seen that. So that itself gives the mindset of the regulator. It is not just a change in the enabling environment, but you require a mindset change. And why does the mindset change come, which has been spoken of by both Mr. Chattopadhyay and touched upon by Mr. Bhatia, that the mindset change comes when things actually move in a particular direction. So it's not that people told fintechs to come up. It's not that someone, although now we have a Startup India program saying you set up startups, but the idea of a Startup India program came because people were already starting up. The bright young fellows who were coming out from college and university studying engineering, they were coming up and setting up these companies which were disruptive. And it's not necessary that they actually followed the global path. So things have happened differently in China. Things have happened. There have been different kinds of fintech companies which have come up in these countries. Some are common. For example, I don't think any other country has this unique concept of the India stack, which came up because we decided, with its challenges, of course, there are a few challenges around the UI DAI, but we decided to set up that there has to be a presence-less way of identifying a person. So the India stack is basically lining up stacking up three things: presence-less, paperless, and cashless. And then you have the fourth component of the stack, which is consent. And using this environment over the last 4-5 years, as Mr. Bhatia was saying, there has been huge change. And I think the best example of how that change can benefit anyone is the UPI, right? And in fact, I was discussing with someone that why has UPI been such a game changer? We've had other things also have come, and they have been welcome. There have been credit cards, there has been NEFT, there has been RTGS, there has been the National Clearing House and stuff like that. And they have all been welcomed as progress. But the UPI system has been taken to be a game changer. Now, why has it been taken to be a game changer? It is because of two things that has to become right when you are driving this entire concept of how fintechs can benefit the ecosystem. That is simplicity and convenience. So the beauty of the UPI is how simple it is and how convenient it is for the customer. You just need to know the other person's mobile number. You send him a message. He agrees to be on your Google Pay or Beam Pay or whatever it is, and then in just seconds you can make a payment with passwords also coming onto your phone without minimum difficulty. Even if you go to internet banking, you will have to look at the OTP. You will have to now, because they have put in many layers of security, you have to do that. So that brings me to the thought, and this has also come about from discussion with various players, the thought that ultimately it is a pure business sense which drives this. And what is business sense? That any good business model should have the customer at the center of everything. So it could be the customer who finally uses, it could be your own customers in the company, your own human resources, but it is the convenience. Any good IT system or any good fintech will have to remember that whatever the product or the service that you are innovating, it has to meet this criterion of being simple and easy to use. And based on various ecosystem developments that Mr. Bhatia was talking about, we've had huge developments in the last 3 or 4 or 5 years. It has been truly disruptive. And decisions taken by the government, which otherwise may have other repercussions, may have had other repercussions on the economy, like demonetization, internal taken by the government, or external, like the COVID disruptions that we've had. This has led to these changes getting accelerated. And fintechs and startups, some of them have some have failed, or some have not been as successful where they have not. But a large number of them has started becoming successful in the areas that they are working upon. And I think it was some $10 billion. So sometimes it helps in getting some numbers on the table. So I think 2016 or something, the total value of all the fintechs and startups in India was about $10 billion. Today it is close to 50 to $60 billion. And in the next 4 or 5 years, that is by 2025, it is expected to go up to 150 to 160 billion dollars. And it covers everything. So if you look at what are the uses of these, or what are the areas that these fintechs are touching, they are touching on platforms. You have platforms like BillDesk for payments. They are touching on the lending systems. You have lenders who are using the entire digital ecosystem, including eKYC, DigiLocker, and your credit rating and stuff like that, to give loans in minutes. So there is a lending, and of course the largest remains the payments. The payments infrastructure that has been created, the Paytms of the world and stuff like that. So all these areas have progressed very fast, and yet there are many areas on which we can progress even better and do it in a manner in which everyone benefits. So what happens is, one of the things that we have been discussing in the bank, and many banks come up with this thought, including global banks. Now that fintechs have come, what will happen to us? That was one of the questions. They are so successful. What happens? Is it an existential question for us? Do we go out of existence? But having seen the progress over the last 5 or 8 years, that does not seem to be the case. Not because the fintechs are doing anything wrong and stuff like that. There are a few things which an embedded institution like a bank has, among which is trust, right? So you can disrupt a system very fast. You can through ease of convenience, but to develop trust, it takes a long time, and it requires regulatory support also. Today, banks are trusted not only because of what they are doing and their risk management systems, but they are also trusted because the country knows, the citizens of the country know, that the government and the Reserve Bank of India are behind a certain set of banks. Say the public sector banks, they get a lot of comfort and cushion from that. Now, in this scenario, if fintechs have to progress, they will, two things I think they are doing very well. They have to look out for niche areas, and niche areas are abounding. So you have these, today the latest development that is being built on the India stack is the neobank, where there is one of the examples I know, I'm just taking one name, Open Bank, who are actually connecting the banks and the direct lenders, the smaller SMEs, and being able to give them. There are many others also. I'm not getting into the names, but there are many others also. And they are doing it quite well. They have already done very well in the payments infrastructure. They have set up these platforms. They are into risk management. Risk management has completely taken a different shape because of the kind of services which some of the fintechs, and many of them, while being operating, say, out of the US, are Indians who have set them up. I'll come to areas like cybersecurity and HR that is required for this a little later. But suffice to say, at this moment, all these things, the fintechs have played a role. But at the same time, they have realized that if they have to get even better traction, it is the collaborative model which you need to have with the larger institutions, which will give you better and greater results in the future. And that is where there the responsibility, I think, lies not just on the regulator, because regulator I'll come to again, that is the topic, but I'm also covering the banks and the larger financial institutions. I think last month was insurance month, so the large insurance companies, how are they collaborating with the fintechs? So say for example, I've written an article on this for one of the magazines they had asked me to write. So what happens if a fintech comes into, say, an organization like State Bank of India? They may be out of the world. And in fact, this was an incident I can narrate from 2019. That is the time till we met people. 2020 onwards, we stopped meeting, at least in person. So this gentleman came and he had a wonderful model. He's an Indian based out of the US. I think by now our bank has adopted that. It was a risk scorecard, which was very, very useful. They designed a scorecard which actually told you in real time basis what are the various, where do you stand. So you get a scorecard from you are A plus or you are A or you are A minus, but that on real time basis they had designed a model through which they would capture various parameters and data from the bank itself and throughout the score, as also give you pointers as to where you are going right or wrong. And it was very fascinating. I found it very fascinating. I said, great idea. You should carry this forward and stuff like that. So he did not tell me that whether he had come to State Bank earlier and all. I found him very bright and all that. I said, we'll definitely try to facilitate. Then he came back and said that, Mr. Basu, if you don't mind, this is my 53rd visit to SBI. You are the 53rd person I have met in SBI on this issue. And it involved a lot of things which the bank had to do, including opening up your APIs. API was mentioned. These are issues where there are matters of concern for the bank and they have to do it carefully. They have to be regulatory compliant. So, of course, I promised him that, I try to make sure that you not have to visit a 54th time. Either you are in or the State Bank will tell you that, what you are giving us does not work for us. And to my satisfaction, I'm told that they are on board. In fact, before I left the bank, I think they came on board. But that is a thought process, So the government has done a lot of things. They have a startup policy. They have this GEM. If you must be knowing about the government e-commerce marketplace and stuff like that. But while these are very laudable initiatives, we have to make sure that they are workable. So based on this thing that the feedback that we got from this particular company and many others, we realized that the way we are talking to the fintechs, it's not that we are doing it, we are deliberately trying to harass them, but it is just that our systems and our models require us, our compliance requirements require us to ask them questions which make it very complicated for them. And then we have this RFP process where you have to meet the CDC guidelines and stuff like that. But the CDC itself allows you to do a lot of things if you have a board-determined policy. So based on that, we got a board-determined policy by which we said that we will be able to do things with specific fintechs on a nomination basis, provided certain criteria, which is doable. Again, you define the criteria so rigidly that they are not able to comply, it will all fall through. So that was one initiative that was taken by SBI, and many of the others. And private banks also, they are not necessarily better. You know, while they have done a lot of work, I am associated with one of the larger private sector banks indirectly because I'm chairman of their NBFC subsidiary for the past few months. Uh, they have done a lot of innovation. You know, the leading banks like HDFC, ICICI, Axis. But it's not necessary that they have encouraged innovation with in a partnership mode with the fintechs, right? Some other banks, in fact, the bank which did not otherwise do well for very reasons not related to technology, that is Yes Bank. In fact, since SBI has now a stake in Yes Bank, we realized that they had done a lot of innovation on the technology front. We have to obviously deride what the promoter had done in respect of managing his bank, but on the technology front, they had taken. And one of the things that they managed to do was to successfully collaborate. And that is what the fintechs also want. They know that in a few areas they will be able to do it on their own, and a few areas they need the banks to deliver. So this concept of regulatory sandbox, so RBI is, apart from putting it up on their website, they are taking some very innovative measures. So they have set up a committee for innovation, which is, they have a standing committee now which has many external experts. They have an internal committee which is headed by one of their TDs. It was set up in January, which is entirely on the digital lending platforms and the digital financial institutions. And in the regulatory sandbox, you put it up for testing. So I think the first round of testing was on payments. The second round of testing, which is going on, is on the current one. I've forgotten. The next one will be on MSMEs. So you can go in. The fintechs can apply, and 5 or 6 of them are chosen to go into that test environment. And similar thing is being done by IRDA. So my submission here would be that all the 3 legs, they have to move in unison. That is the regulator, and we are seeing a very clear part that the regulator is alive to the issue and is opening up. Obviously, there are many speakers who will come after me who are on the ground, who will be looking for much more regulatory flexibility. That is bound to happen, and that has even happened with MAS. The Monetary Authority of Singapore was among the first to take up this concept of regulatory sandbox, and they still remain a model for many others in the world. But while Reserve Bank is opening up, there will be a desire to also see that there is more flexibility. All the fintechs will ask for more, so that balance has to come. And at the same time, the banks who themselves have 2 things. One is they have to collaborate better, and second is each bank, because of the threat that they face from the fintechs, decided to become an innovation hub itself. So almost all the larger banks, they have set up a team, both globally and in India, who have been given the latitude to design and create new kinds of things with all the tools of technology that are available at any point of time. You use cloud, you set up a new innovation which can help you in risk management, customer service, better lending, digital lending, so on. You use AI, machine learning to do that. You use blockchain for various things. Initially it was trade finance and remittance. Now it is delving into other areas. But while that is being done, how much of innovation the bank itself should do, and how much it should collaborate with the fintechs, that will be one other very important area that the financial institutions themselves have to solve. So because they are not pure digital institutions, they're an institution like Digit, which is the insurance company which is doing well, or if you have a complete new digital bank now, they can do that. But most of the traditional banks, they will have to have innovation hubs, decide how much they will do themselves and how much they will give to the outside. Just one last point that I wanted to mention is on the ecosystem within the financial institutions itself, which is, there are 2 very important things that come into play. One is HR. It is very easily, it's felt that FinTech is all about technology. It is not. It is about managing your own people to be able to understand the changes that are coming. So it is about change management. It is about your HR management. And equally important today is while you are opening up the system, there is a huge regulatory concern over the security aspects, right? Which is why probably SBI had that interaction 53 times with one particular fintech before they opened up. So how do I manage cyber security and the concerns around it while I am opening up my ecosystem? This interplay of forces between the banks, the fintech, and the regulatory environment, and how these opportunities and challenges are addressed, the better it is. The better it is done, the faster will India change. It is already, we have led a revolution which we had not possibly done in some niche areas like UPI and the India stack, various facets of the India stack. Let's see how we can do that in the future as we go along. Thank you very much. It was a pleasure speaking here. I just shared what is my personal experience, and hope that people will find this useful. Thank you.
Thank you, Basu sir. This was a really good insight into what actually has happened in the Indian banking industry, also internationally, how it is driven, and specifically from SBI perspective. So if you look at not only fintechs which have done the innovation in India, but banks, the larger banks also have done innovation in India. And SBI is a very good example for YONO. YONO actually created that, disrupted that entire market and become a case study world over, where it is actually presented also. Now, so I know that you told that you actually were overseeing that CIO department and you were actually part of the board of directors. So, Basu sir, if you can throw some light on this, how this idea for entire that YONO came and how this got implemented, and how you actually competed actually with so fintech actually, that will be really good.
Right. So very quickly, because I've already, I think, spoken for long. So the idea of YONO came from a design concept that the bank was actually concerned that in the retail field, there could be a time when, the digitally savvy fintechs could actually take over some of the activities which as a bank we were doing, right? So how do we, kind of cater to that situation? So this thought came that it needs to be a kind of a platform. So if we do only internet banking, that is not good enough. So we need to do something where we offer, because the younger generation especially, they are oriented to technology and they want a single app where they wish to do everything. Initially, in fact, the thought process was that it will be an app which will allow them to do things using their bank account and do shopping, ordering, and stuff like that. Then it was decided that no, that will not be a good design. We should have the core of the banking activity also within that. And since SBI has the entire financial ecosystem with them, in the sense that we have a subsidiary in almost every financial area, whether it is life insurance, general insurance, mutual fund, DMAT. So all those things can be brought into one platform, and a single app can allow a customer to go in. So of course, for with a solution which was but from a very large, very established player like IBM. But while the journeys were developed, there were many areas in those journeys. The journeys are nothing but a this new age term for saying the processes. The processes are now called journey. While these processes were developed, some of these processes we collaborated with many of these fintechs which came in, not only for YONO. And then we are very happy that YONO, the concept of YONO has been liked, and therefore SBI actually has two separate digital apps on the mobile. One is only confined to banking, which is what we used to call earlier we used to call it State Bank Anywhere, which is basically the internet banking on the mobile, which we have to use the YONO brand name we called YONO Lite. So that sometimes YONO, because of the large volumes and large pressure of everyone wanting to log in at the same time, the service had at sometimes underperformed what we had wanted. So that people have a choice. Most of them have downloaded both YONO and YONO Lite. YONO gives them the option of looking at their bank accounts, also investing in mutual fund, buying things, ordering things. And it was not thought of by any bank in the manner in which it was done. But right now, these things will get copied very fast. So all the other banks have apps, all the leading banks, and in the private sector have an app of a similar nature, although they may not be affording the online platform concept. But so that was the genesis of the thing, and we are very happy that this is being talked about. We would like, and the other thing we discovered there, which is a challenge for everything which is good, there is always a challenge. So the only challenge in this was that an organization like IBM also had not thought of how big the Indian scale can be, and SBI represents the Indian scale. So when it was 50 lakh, 1 crore people registering, then it was not so much of a challenge as far as managing the scale. But as soon as now, I believe there are 20 crore customers, some ridiculous figure, 8 or 10 crore customers already on YONO. And on occasions when all of them get it together, or even otherwise, there is a challenge. So for feedback that I got from IBM is that world over, the maximum they had used that platform, that particular software solution that they had before it was customized for SBI, that size was about 1/10. Their highest till then was 1/10 the size of SBI. So India, that is another learning for fintechs, that when you are building up to scale, you have to make sure that you have the hardware and the software solutions which can match up to that scale and still give customer convenience and things like that. So broadly, this was about YONO, and indeed this is something which SBI is proud about. The SBI chairman, the current chairman, recently went on record saying that he's looking at the next version of YONO now, which will have many other facets. Because you have to constantly innovate. 1 year is good enough. After 1 year, somebody else has overtaken you. Thank you.
Thank you, Mr. Basu. This was nice. Every one of us is actually proud of the experiment and experience of YONO, because the scale at which YONO is built, probably there is no parallel. I have worked with the international banks, and I have covered this YONO case study in my book in very detail, including the designs which have gone into that and how it actually has created a new paradigm for the entire fintech industry, that you actually can innovate in the midst of basically running a bank which is bank which is already running, and you can create that, and you can create a system which can service actually 200 million customers, and 200 million basically digital native customers. So this basically itself is basically a big proud for all of us basically. So thank you, Mr. Basu. This was very nice. Thanks for joining us. Now I will request Mr. Venugopal, if you can actually go next. Thank you.
Good evening, sir. Am I audible, sir? Clearly?
Yes, Mr. Venugopal, you are audible.
Yeah. Good evening, everyone. Respected Arijit Basuji, former MD of SBI, Mr. Ranjit Kumar Mishra, Mr. Ashish Anand, Mr. Vishwarup Basu, Mr. P. Raju, Chitranjan Chattopadhyay. First of all, I am extremely thankful to the organizers of this event for giving me an opportunity to speak before this August Forum of Eminent People. Yeah, it is a really August Forum of Eminent People. I just heard Mr. Arijit Basu, very, very eminent personality, having a very good background of banking and other event industries. And his story about YONO, evolution of YONO also is very inspiring. It shows that we also, as public sector banks, also have got a lot of talent. It is not the only forte of the private sector entities. Very thankful to Mr. Arijit Basu also for innovating and showing the world that banks, public sector banks, traditional institutions also can do wonders. Mr. Basu sir, first of all, I would like to react to some of your comments. Actually, I was also wondering what is the title or the topic that is given today. Is it RegTech versus FinTech or RegTech and FinTech? This question I also had in my mind when I was preparing for this webinar. Then I had some additional reading, and I came to know that there is a point, there is a thought process behind selecting this particular topic. The FinTech is a vast area where RegTech is a part of it. That is a traditional knowledge. But now RegTech is expanding like anything. It is that particular RegTech universe is also expanding, and it is there is a challenge between these two also. So the topic has given me some insights, and I have prepared something to be presented on this forum. To give a brief introduction about myself, I'm a ACMA and presently working as a general manager in Canara Bank, handling credit monitoring and administration. I have never dealt with this FinTech or data areas, and I'm a totally layman regarding those topics. But still, I thought my experience as a banker, as a traditional banker, will be useful, and my perspective also matters in this type of discussions, because now the question is the term you are coining is disruptive technology. Everybody is saying that the new fintechs are disrupting the traditional setup, and they are challenging the existing bankers. So in such a situation, I want to represent as a banker, and I would like to discuss the issues from the public sector or commercial bank's perspective. And I will not definitely going into the venture. I will not venture into the technicalities and statistics in this discussion. Sir, we all know that the word fintech is generally referred to those companies which are offering financial services through latest technology. But the same word is applicable to all financial sectors, which services which are made available in technologically advanced platforms, even by the traditional financial institutions. Suppose the YONO, what Mr. Arijit Basu is referring, is also a fintech initiative. Likewise, in our bank also we have something called Candy. So similarly, we are also doing so many things. So the word fintech is having two connotations. One is as an industry and as an initiative. Two things are there. So to make the record straight, banks have adopted fintech model long back, several decades ago actually. Right from the advent of credit cards in 1950, ATMs in 1960, core banking in 1990s, many things banks have done at their level. But the global financial crisis in 2008 has changed the total game itself, and fintech revolution has brought the new generation players. But they are playing based on the new technological platforms, IT, AI, and machine learning, which bankers may not be so used to in those days. So there was an initial advantage for the financial products that is offered by the new players. Definitely traditional banks have lagged behind. I agree that. These new fintechs have offered payment services, investment advisors, insurance policies at very low cost or nominal cost. This actually made a big difference, I feel. And the same services were offered on smartphones. That attracted the new generation also. So definitely they had an edge when they have come into the field. But bankers as such are not lagging behind. Now they are also taking up that. But one more issue where fintechs have scored are, they are bundling their services along with non-financial services like food delivery, online shopping, or e-wallets, or payment services, etc. They are bundling these services along with non-financial activities. Like a taxi aggregator may be giving a wallet, money wallet. So like that they are doing and innovating. Let me talk about word disruption. The word disruption indicates that the business of incumbents, that is existing commercial banks or traditional financial institutions, insurance companies, stockbroking companies, or wealth managers, is disrupted. Our existing system itself is disrupted due to the advent of new fintech initiatives. This is what we are reading and writing everywhere about while we are talking about fintechs. The incumbents, that is bankers like us, or insurance companies, traditional broking companies, are the existing players, whereas the new generation fintechs are termed as challengers or disruptors, because they are posing a threat to the well-established and long-standing business models of the incumbents. Then comes my points of concern. As a banker, as a traditional banker, my points of concern are whether the existing system is really challenged. We are made obsolete, or our models are disrupted due to these new players. Whether we have a chance to reinvent ourselves as dominant players in the new ecosystem as well. And why there is a threat to our business model at all when we are successfully functioning for last several decades. What are these functions of these fintechs which caught the imagination of the new generation? These are the pertinent questions I have asked myself while preparing for this webinar. The answer to all these above questions lies in reinventing our functions and making available these services unbundled or bundled on digital platforms with reduced charges or improved efficiency. That's what already my earlier speaker has discussed about. So I would also like to discuss about these things in a brief manner. See, what I believe is the bankers, because I am talking only about banks, not about insurance companies or broking companies for this present. Banks should try to convert themselves into mega fintech companies. They have to make their services or products available on the digital platforms and in a better way with a cheaper alternative, means to face the challenges which are likely to threaten their very existence. So our sir Arijit sir already told that existential question is there. So the level of innovation and technology used by fintechs is very high, and we, the traditional bankers, are generally ill-equipped to match those standards. So here the question comes about the recruitment of HR people, technically competent people, and changing the way we do the information systems and etc. The out-of-box thinking also is very much essential, because the products as it is cannot be offered on a digital platform. We need to innovate. We need to package in a different way. And we can even think of using the artificial intelligence or machine learning to offer a better product also using our existing database. Sir, there are many initiatives already taken by the banks in this aspect. But one thing I want to say is various surveys have been conducted already across the globe regarding the adoption of fintechs. That says that that shows that India and China are most digital the adopted countries in terms of fintechs. Where the global average is around 63%, whereas India and China have acceptance level is around 87%. But the customers generally preferred their existing bankers. This is one of the findings of those surveys, where they said that they're preferring their existing bankers for their transactions, even today also. But still they are shifting to other fintechs, the newcomers, because of the nature of the products they are offering or the innovation they are doing. However, the trust factor is still remaining. They are always responding to a query saying that there is a trust factor, and if their traditional the banker, their existing banker, is in a position to offer services, they'll stick to them only. This made me a little bit happier and confident that we can make a difference provided we can offer the services. Our customers' loyalty will not go. So the incumbents that are most responsive to this competitive threat, that means bankers, are those who disrupt their own propositions. It was written in a report I have just read now. They say that the incumbents that are most responsive to this competitive threat are those that disrupt their own propositions and offer comparable fintech services, either through partnerships, acquisitions, or in-house developments. And this is happening everywhere. As a bank representative, I can say that all these models are adopted by the banks to offer the fintech products, and the process is slow, but it's happening. See, though the banks, they are having all the wherewithal of technology and have made a good beginning, they are finding themselves lacking when it comes to new generation internet-based technologies. A major shift in thought process of financial institutions in terms of business process, data management, product design, recruitment of IT experts will be useful for the banks to give a stiff competition to fintechs. So today's topic, I'll directly come to today's topic, RegTech versus FinTech. So everybody knows what is RegTech. It is considered as a part of overall FinTech ecosystem. Then why we are discussing about RegTech and FinTech versus FinTech? The regulatory guidelines are becoming stricter after the GFC, that is Global Financial Crisis in 2008. And with a view to reduce the burden of these regulatory terms, the financial institutions are starting to turn to new technology solutions, and entities which provide these solutions are called RegTech companies. So RegTech is an integral part of fintech ecosystem used for compliance of new and complex regulations. Sir, capital planning, risk management, GST compliance, eKYC, credit scoring, etc. We are already employing as a RegTech initiatives in our banks also. For example, early warning signals also is a FinTech, a RegTech initiative which banks have adopted as per the RBI directions. So we can therefore say that RegTech and FinTech is a matter within the ecosystem of FinTechs. The RegTech deals with the regulatory compliance, whereas the FinTech deals in dishing out financial products. So instead of being seen as an evolving subcategory of FinTech, RegTech should be viewed as a separate phenomenon now. because there is a changed scenario, because the scope of the regulatory compliance has been expanded like anything during the last 1 decade, post 2010. Today, FinTech has entered a phase of rapid development due to proliferation of startups, IT and e-commerce firms that have fragmented the financial service market. And this new situation, there is a challenge actually for regulators, because the evolution of FinTech necessitates a parallel development of RegTech. In fact, there is a need for regulators to develop a robust new framework that promotes innovation and market confidence. Not only that, the tools or the products that are offered by FinTechs are many times so innovative and so new that the existing rules or regulations or the knowledge levels of the present regulators are not sufficient to understand their ramifications or the usage of those products. What are the repercussions of introducing them into the system? What happens to the financial systems, etc. So the development of FinTech and the development of RegTech have been influenced by different driving forces. Rising smartphone penetration, unprepared traditional financial systems, and most importantly, the behavioral shifts among customers. They are giving a fertile ground for FinTech development, where current investment in FinTechs is increasing in a staggering pace. So RegTech, on the other hand, has emerged as in response to top-down institutional demand arising from the exponential growth of compliance costs. See, there is exponential growth of compliance costs. That is why RegTech has become important, because the institutions need to save on the money also. In the process of this regulatory compliance, they are spending a lot. They are spending a fortune. So the RegTech has come to the rescue of the bankers in providing a cost-effective solutions for complying with the regulations. The implementation of far-reaching extensive regulatory reforms has driven the evolution of IT and compliance in major financial institutions worldwide. Compliance costs present a powerful economic incentive for the development of more efficient compliance systems. That's what I told just now. And innovative technologies are at present in a natural solution. Traditional financial institutions have driven RegTech's evolution by developing centralized risk management and compliance functions to address a dynamic regulatory landscape. Already, particularly these large global banks have already started implementing these things. But the primary barrier to RegTech's development is not technological limitations. It's not only technological limitation, but the ability of the regulators to process large volumes of data that the technology itself generates. Many times, this FinTech have the ability to generate a lot of data, which, if properly not monitored, may result in problems to the regulators in future. So regulators need to adopt a coordinated approach that seeks to harmonize financial regulations and support the continued development of RegTech. Sir, the ever-increasing compliance requirements make it necessary for the regulator to work with FinTech and RegTech companies for 4 reasons. Sir. To know the collection and processing methods, streamline and standardize the compliance requirements across the markets, simplify the reporting procedures, enable data sharing with other regulators to obtain better results for the system as a whole. So these 4 points the regulator will be interested in while dealing with this FinTechs and RegTechs. They are interested in the collection and processing methods and standardizing the compliance procedures, simplifying the procedures, and data sharing with other regulators. This is also more important because multiple regulators are governing the process across the globe, across the country also. So there should be a system where this data sharing should be there among the regulators also for better results. This is what one of the findings of a project report I have read. RegTech offers benefits of both to both industry and regulators. It can be used for control of costs and risks more effectively to release, sir, one more important, to release surplus regulatory capital. So the capital planning is one of the important areas banks are facing now after the Basel norms and all. So the FinTech solutions provide an opportunity for the banks to save on the capital requirements, and it's a lot of money. It translates into a lot of money. So the present new avenues for FinTech startups, advisory firms, and technology tech companies are like this. And simultaneously for regulators, it allows the development of continuous monitoring tools to identify problems as they develop and reduce the time it takes to investigate compliance breaches. This is one of the important things, because many of the times these compliance breaches goes unnoticed for a long time because of the sheer volume of data. With the presence of a properly managed RegTech initiatives, the regulator will have the comfort or the advantage of locating the problems at a very early stage. Sir, the institutions with the most data on borrowers will be best placed to assess their credit risk and extend them credit. And those institutions increasingly are more likely to be large tech companies rather than traditional financial institutions. As we have already seen, global giants are entering into the fintech market. Like Google also is entering into a fintech market. So their customer base is just unimaginable across the world, and cross country transactions will be there, and the monitoring will be very difficult. So markets are evolving more to rely more on data. This evolution of this new form of financial service provider in turn will demand further evolution of RegTech as the market moves from relying on KYC type information to KYD paradigm. Know your customer to know your data. So with consequentially transformative effects on the finance and its regulation. So here, as per this discussion, what I observed, as per this data I observed is, RegTech has expanded like anything in recent years. Though FinTech has improved a lot, RegTech also has expanded like anything, and there are so many areas where their requirement is there as of now. And regulator needs to push them into focus. Regulator needs to encourage the people to improve, take more initiatives on RegTech platform. So that's why what I want to conclude is RegTech's truly transformative potential lies in its capacity to enable the real-time monitoring of financial markets, thereby facilitating a reconceptualization of the financial regulations. The intersection, therefore, is between large emerging fintech market and increasing challenges for development of RegTech. It is not an intersection between fintech and RegTech as such, but it is between large emerging fintech market and increasing challenges for development of RegTech market. Sir, the existing incumbent institutions and new players need to join hands together for playing a major role in the fast expanding universe of fintechs. And the disruptive power of this new initiative should not bother the traditional players, as they need to take this as an opportunity for them to reinvent themselves. We need to reinvent ourselves for providing services to the people during the coming decades. This is what I felt after going through the data related to this topic for preparation of this webinar. I also got a lot of insights thanks to you, sir. And I sincerely thank the organizers for giving me this opportunity. Thank you very much. Thank you, one and all.
Thank you. I think, Mr. Venugopal, you have correctly identified that RegTech is actually to feed regulator with the real-time data. And specifically, it increases the cost to manage the cost. If you look at the circular which MAS has actually had issued in 2020, circular 610, it actually has increased the data submission from banks to regulator by 10 times. In one of the count is that at present, banks are submitting around 25,000 data fields to the regulator, and this data field is going to increase to around 310,000, 3.1 lakh actually by year 2025, when this MAS circular will actually be implemented. Now, why regulators require that much amount of data? Regulators require that much amount of data because its existing monetary policy tools are not effective. They want to get into majorly in the systemic risk, and they actually want to get into managing the systemic risk and managing the monetary policy better. And what has happened is on fintech side, fintechs actually have collected data even from the unstructured data. So fintech and RegTech has got that interface, that fintech are helping, giving that vision, making it possible, reducing the cost to collect the data which is required by the regulator. And here comes that marriage, that one side is fintech and another side is the RegTech. Now, one of the most important vehicle on that is actually this entirely early warning signal. So, Mr. Venugopal, if you can talk about the disruption which your department is actually making in the early warning signal in terms of using the technology. I have seen that there are so many RFPs which actually have come from the public sector bank especially, and the disruption which is actually happening in this field. Mr. Venugopal.
You want me to talk about EWS?
Yes, if you can quickly give that.
Early warning signals are mandated by RBI. Nearly 43 parameters were given to the banks to see whether there are any signs of incipient sickness in those accounts in an advanced stage, and whether they are fraudulent in nature. So we have already implemented the system. That system is working well, but there are many initial hiccups. That system should evolve. There is a lot of machine learning involved. And added to that, recently the DFS has asked for introduction of 83 new parameters also to be included in this gamut of this early warning signals. That also we are trying to include. Lot of initial problems we faced because the parameters which we set may not work in the real-time environment, especially for the external events. Internally, whatever data-based events are there, like check bouncing or overdrawals or limit expired or long pending overdues, so special monitoring and all can be easily picked up by the systems. But when it comes to external data, the results are not so encouraging. It still has to evolve much because the machine is unable to find out whether a news item or a signal from the external sources is adverse in nature or is favorable in nature for the company and the bank. Many times we are thrown with so many warning signals which are not at all warning signals, which are positive news also. Like suppose a company has got a good investment from abroad, then that is also coming as an alert. So the system needs to learn so much. We are going in that direction and giving inputs to the vendors to filter those things and give a better solution. This is an ongoing process as of now.
Thank you, Mr. Venugopal. Thanks for joining us. So today we heard ex-MD of SBI, the largest bank in India. We heard Mr. Venugopal, General Manager at Canara Bank, one of the leading public sector bank. And now I think we are going to now hear Mr. Ranjit Mishra, CMA Ranjit Mishra, who is Chief Risk Officer at one of the small finance bank. So Mr. Ranjit Mishra, over to you.
Thank you, Mr. Bhatia. Thank you, Chairman BFSI. Thank you, Chairman and Vice President of the Institute, and the fellow speaker, a stalwart like Mr. Arijit Basu, Mr. Venugopal, Mr. Ashish Anand, and all those listeners. So, FinTech and RegTech is really, a topic of relevance, which is very important and close to, our heart. When we talk about evolution of Indian payment system, so it's started in a way from 1981, which started with the first credit card launch. Then in 2004-5 RTGS and EFT. Then the NPCI came into effect in 2008, and then the journey of NPCI has started in 2010. 2010 they have launched RuPay card, and the FASTag and UPI has been launched in 2015-16. There is a huge, imputer scam after the demon, Bharat Bill Payment System and the Bharat QR code. So these are the experiment done by the industry players all across, be it the bank, non-banks. And just to clarify, I'm not working with a small finance bank. Satya Micro Capital is a non-banking finance company. So I was having a small presentation, but it's not, I'm not able to share my screen. There is some technical glitch, So I'm just discussing about the whatever I have to present during my this course of discussion. And then we have there is a lot of progress which we have seen in terms of fintech landscape. There are era pre-2012 era when there is no fintech companies. In 2012 there is an insurtech company launched called Policy Bazaar. They were the first insurance marketplace in India, and almost whosoever is listening and whosoever is participating here, that platform must have touched our life, maybe buying some kind of vehicle insurance and motor insurance and personal insurance, maybe life, non-life, all these kind of. So that is the evolution which has started in 2012 in fintech landscape, which Mr. Basu has already talked about in detail. And then came to the the digital payments, which has virtually there were Paytms, MobiKwik, and other players like PhonePe and Google Pay. So lot of things has happened during these 5-7 years or 10 years, wherein everybody is got the smartphone. There is availability of internet, because fintech and payment will not be only working in India if the banks and NBFC innovates. So there is a whole host of the infrastructure which was required, which was supported by the telecom department, the various governments telecom policy, then the regulatory truths from the Reserve Bank of India and other regulators, who is making possible for the participant who can start testing insurance product. Digital payments is the big success in terms of it started with the wallet, and it's going ahead with the UPI, and it's a great thing India has created. Whenever we saw any reports and the fintech progress in India, UPI comes on the top. In 2013 14, some company has started lending digitally. At that point in time, it was like okay, it will happen, because we were in the offline market and everybody is coming from the banking background. And whenever you see any challenge, you will go and say, okay, it will not work, or it will work. And then in 2015-16, with the help of so many technology advancement, wealth tech companies has starting coming into existence. We have seen the Zerodha, the progress of Zerodha, almost 50% transaction on a day-to-day basis people are doing on a Zerodha platform. And UPI is giving impetus to Aam Aadmi, to making even a 10 rupees payment to a small vendor sabji bala by UPI. We are seeing that kind of improvement. We are seeing the neo banking, insurtech, micro lending, which is again the fintech side. New development is also happening, like earlier it was only banks and finance company. A lot of initiatives has been started on bookkeeping side. So Khata book has come. Then you have a bigger player like Amazon and Google and Walmart and Flipkart. They are having huge database of the population, their transaction. They know what we are doing, what we are buying. So this is for them to get into to the fintech domain, do be it lending, be it insurance, be it all other services. They know our all the purchases, and they have AI or ML capability, and they are utilizing that. And then by understanding these very nature of requirements of all participants, be it the customer, service provider, Reserve Bank of India in 2000 launched regulatory sandbags. And then there a lot of startup has participated in that regulatory sandbox. Currently, India has almost 2000 plus fintech companies, dominated by the Mumbai and Bangalore. Bangalore and Mumbai has 1/3. Mumbai has 437 as per Medici report. Bangalore has 447. Delhi has 208, and rest of the country has so many fintechs. Even Calcutta has 47. Most of these fintech companies are operating in the payment lending space, wealth tech space, personal finance space, and the insurtech. These segments are taking lines of shares from the fintech area. RegTech and cyber security is very important, as everyone is sharing data, everyone is sharing personal details to all these companies. So the government and regulators are also concerned, and they have moved very a lot of regulation regarding that. So some of the companies has started operating in that field also, and this is also topic of relevance for our discussion. So far, in India in 2019 to H1 to 2020, $5.4 billion investment happens at a various stages in fintech company. So these are the biggest booster shot after e-commerce. Fintech is the next field where people are getting huge capital in terms of that happens only when the trust comes into the segment. It is expected that India will become a fintech leader by 2025. Our CAGR in market size will be around 22%. Second largest fintech startup base we have currently operating out of India. 10% deals growth is expected in a foreseeable time to come. 50% CAGR in digital payment transactions. So India is a laboratory of all the experiments which is happening in payment area, be it NPCI, be it IMPS. We all can transfer money 24/7 whosoever we want. That is not happening even in advanced country, even in Germany, even in most of the European countries don't have that kind of capability. So UPI rail is definitely a game changer. In fintechs, generally ROI expectation is around 30%, which is investors are getting. AI ML is the new technology which is getting adopted by most of the fintech companies, and why fintechs are moving ahead in the curve. I'm not saying the old bank and the old NBFC is going away, but what people are wanting 24/7 service, frictionless service. We have a technology enabler which has enabled this. If I want to take buy health insurance or motor insurance, I can buy at 11:30 night. That is amazing. I can transfer money to my one of the relatives or somebody at 2:30 a.m. in the morning. That's nowhere seen in the world. So all the ingredients, it has not done in one day. It has been done in a sequential manner, where the government supports are there, because policy push from the Niti Aayog and the financial services department of government of India, and then we have a proactive listening regulators like RBI, IRDA, and SEBI. Everybody is working towards the common goal, where the customer will be the real king, where the customer, if I want some loan, I can get at any point in time, and 24/7, and be it Sunday or Saturday, doesn't matter. Coming from next month, all the payments, it will be 24/7. So this kind of forward looking approach and is very, very much required, because earlier we were facing rigid banking, where after 4 p.m. you are not able to enter in your banks, you cannot withdraw money, you have ATM problem, you have whole host of problems. The only problem is that these services currently are available with the most of the janta who is having digital access, digital literacy. So that population definitely will increase thanks to WhatsApp and Facebook. Our financial services will also see the WhatsApp moment, when the OKIN framework will take a full shape, like account aggregator, which is happening, where I have authority which lender, even if I am a customer of SBI or SDFC, if I am getting a very good rate of very fine terms from the federal bank, I am going to give 30 seconds access of my accounts. I'll get that kind of capability India is bringing. So that's really great. Addressable lending opportunity is good, because we have worked very hard and done well done in payment space. Insurance is far ahead. Very good progress has been made in lending. Personal or unsecured piece has been taken care, but the lending in SME and the mortgage and secure part is getting solved due to with the co-lending coming into the picture. Various initiative from the eKYC, Jan Dhan, Aadhaar, eKYC, virtual KYC, and then the biometric facilities, and all these are helping. So currently we have in 2017 there was an opportunity of $640 billion lending in India. By 2030 it will be $900 billion. Digital lending size was $75 billion in 2018, and it is expected to grow by $350 billion in 2030. And that will happen because we have India stake, which India stakes give us the consent layer and cashless layer, paperless layer, presence-less layer. Well, when we say consent layer, this talks about, this is about the personal data. When we say cashless layer, it talks about, IMPS, AEPS, ABPS, and UPI. Paperless layers, Aadhaar based eKYC, I can sign my agreement via eKYC, via eSign. I can provide my papers through the DigiLockers. That is a great, overall ecosystem has been created in a way so that the instant all these activity will happen within a 30 seconds. So that's the great achievement for all of us. Presenceless layer is Aadhaar based authentication. Even if I'm sitting in my village, I can take loan from a fintech company or a banks in Mumbai. So that's really great. Fintech is another growth driver because the banks cannot go everywhere, but technology via internet, backed by internet, can go everywhere. We have currently 15% unbanked population that will be catered through the fintech. We have the cheapest data in the world. Our credit demand is huge, around 400, $240 billion credit gap does exist. We have ultra low level of insurance penetration in India. India has 3.69% in insurance, life 2.76, and non-life is 0.93%. Supply side drivers, of course, will help. Government has taken a lot of initiative, which we already discussed. India Stake, UPI, Jandhan, and then the consumer centric policies in terms of personal data protection law, which has been brought in 2019. That has created a huge impetus for the growth of fintech company. Investor confidence are rising in India. Every third deal or second deal is happening in the fintech landscape. So we have a opportunity in the lending B2B, B2C space and B2B space. So B2C space is very visible to everyone. There is a B2B space which is happening between two companies and corporates. There also huge progress in terms of fintech happening on lending side, on insurance side, on payment side. In fact, accounting and taxation, there are also a lot of companies are providing their services. Wealth tech and treasury is going to be a next a wave where the lot of innovation will happen. People will feel that innovation. We have seen Zerodha, we have seen Grow. We will see much more. And then the Ashish probably will talk about the blockchain and crypto. That is the new thing which will come into in play. We have a success story in terms of digital lending, digital payments, which we have Google Pay, Phone Pay, Paytm, Instamojo. In lending, we have a Capital Float, Credex, Case, Fairsend, Lending Card. These are the success story which is backed by the banks, some of the institution, supported by technology, adopted by the people who is looking for a frictionless service, who is looking for a DIY kind of. I'm not going to stay in a line for 4 hours and put an application for my loan, put an application for my bank account, put an application for my broker account or personal finance. So these are various segments in India. Neo banks are challenger banks are also coming in the recently. A lot of challenger banks has come into the play. That's a Khata Book, Remit to India, and OK Credit and Jupiter Cred. All these are kind of challenging the conventional distribution or financial product, which is touching lives of the people day in day out. Obviously, these fintech development will definitely happen, which will be backed by the technology. These are the technology which is API driven, which is cloud based. You don't need to create a whole host of servers. These are backed by biometrics. AI ML will definitely kind of digital footprint we are generating every day. Everybody is having a smartphone, and all activities are getting monitored and captured. So AI ML will definitely help a lot by deriving algos, big data analysis, and distributed
Mishra
ledger
ji, if
will
I
help.
can request you to summarize, because we will have to finish this by 7.
Yes. Please, please.
Sorry.
So, fintech regulatory ecosystem, definitely on payment side, we have already great law on the regulation side in lending, and RBI is having robust lending framework. Payments and regulation is also very well covered. Regulatory sandbox is providing impetus to lending and payments and the insurance technology. Key risks and challenges will be definitely in uncertainty about the regulation going forward with respect to data localization. Data security is very important. This is key area which has to be kept in mind by the all player, and the regulators will be watching closely. Systematic risks, as we have already discussed, cross border transaction will happen, and the emerging theme will be definitely agri-tech, health tech, prop tech, account aggregator, neobanks, and full stack companies will be in play. Key takeaway and outlook from my side will be payment will here stay. Crypto assets will become mainstream in some time to come. The pipeline of fintech IPO will grow globally, so be in India. Embedded finance will be huge. That is a B2B2C, and the new maker of fintech emerge from India. We probably we'll see the lot of global player out of India, and M&A activity will be definitely improved. So these are my words around the fintech, and the RegTech. Definitely, a lot of action will happen on that note. Those will be close to the customer. Those will be near to the customer. Provide the DIY product where customer don't need any training 24/7. They will definitely be the winner, be it the bank, be it the NBFC, be it the non-banks. Time will tell, but all players will exist. With these words, thank you all, and open to the question. Thank you.
Thank you, Mishra ji. Thank you for joining us. We will go to Ashish Anand. So all of us, we know that there is a lot of work which is happening on the agriculture side, especially with the agriculture bills which are coming, which are enabling to create the market, to help the farmers to realize their products, value for their products. So entrepreneurs are the people who actually are able to see the future and who actually make it happen. We have got with us today Mr. Ashish Anand, who could see that farmers bill and who has gone and established the Andhan as well as the blockchain-based warehouse receipt sharing platform. And in India, for the last 3-4 years, as we heard Mr. Basu also, that Yes Bank was the first to get into these areas, and they actually got into the blockchain and other things. We have got an entrepreneur who actually is taking that legacy of establishing platforms, establishing the fintech platforms on blockchain forward. So over to you, Mr. Ashish.
Thanks a lot, Mr. Bhatia. So I'm both a professional and entrepreneur. So before I became an entrepreneur, I was a chartered accountant. So very happy to be here at part of the banking committee of one of the professional bodies. Thanks a lot, the institute as well as chairman sir and the vice president sir for giving us this opportunity. I would start with the presentation, and hopefully that will be able to tell us more about how we are working into the segment. But before I go into the segment itself, I would like to talk about the blockchain itself. So first of all, thanks a lot, Chattopadhyay sir and Iyer sir for giving me this opportunity, and the speakers, Mr. Basu, Mr. Bhatia, Mr. Venugopal, and my dear friend Ranjit Mishra ji along with the audience. So we are today talking about one of the most disruptive technologies, especially in the banking event, a technology that is only 10 years old. It started in 2019, and as Chattopadhyay sir was mentioning that he started his introductory speech with background of the financial sector problem we saw in 2008. So the financial crisis was actually the motivation behind what we know as Bitcoin, cryptocurrency. In a few years' time, and the industry, especially the financial industry, as well as some certain elements in the supply chain, manufacturing, etc., they realize that while Bitcoin is a cryptocurrency, there is a very innovative technology behind it called blockchain. And we saw that blockchain being started, getting implemented. And today there have been, big implementations across large supply chain, large financial institutions where more than 200 banks are working together on a single platform. And then in less than 10 years, in 2019, 2020, what we saw that the CBDC, so as earlier it was mentioned that by Bhatia sir, that our Deputy Governor himself is talking about developing India's CBDC. So in 10 years, this is a technology that has captured the imagination of the bankers across. As the topic is RegTech versus FinTech, so I would say this is a technology that brings RegTechs and Reg as well as the regulators, the banks, and the FinTechs all together. That is how the network can be set up, that even the regulators can be part of a blockchain network. And they, like Bhatia sir mentioned, need of sharing 300,000 data points per annum. Perhaps with blockchain technology, not perhaps, but actually it is 100% possible, that regulators can be part of the ecosystem and themselves be a part of the data mechanism instead of asking the banks and asking the other regulated entities to share the data point. With that thought process in mind, I would just take a few minutes to introduce blockchain itself, what blockchain is. And for this purpose, I would request a couple of minutes of a video. So we will be running this.
Writing's not that easy, but Grammarly can help. This sentence is grammatically correct.
Let YouTube skip the ad. Yeah.
When you want to buy something normally.
And just one caveat, this video talks about what if there is no bank. That's not the intention here. We will take the core tenets of blockchain from here and we will see how it is getting applied in the industry or in the banking space and where it helps the regulation.
Using your normal bank card, this is what happens. I give my card details to the shop. The shop asks the bank if I'm good for the money. The bank checks its records to see if I've got enough in my account. If I do, it lets the shop know. It updates its records to show the movement of money from my account to the shop's. And it takes a little time for its trouble. Now, if you wanted to remove the bank from that system, who else would you trust to keep those records and then not alter them or cheat in any way? I wouldn't trust you. I wouldn't trust you. In fact, I wouldn't trust any single person, but I might trust everyone. The idea is you don't have a central record of transactions. Instead, you distribute many, many copies of this ledger around the world. Each owner of each copy records every transaction. So, to buy something using cryptocurrency, I give the shop my details. The shop asks all the bookkeepers if I'm good for the money. The bookkeepers all check their records to see if I have enough. If I do, they tell the shop, and then all update their records to show the movement of money. So there's no way that a forged transaction can make it in. If I try to alter a ledger, it won't match all of the other copies. And it gets rejected. Oh, and one of them, at random, will be given a reward of some newly created cryptocurrency. This is how cryptocurrencies work. And remember, all of these bookkeepers, all of these ledgers, they're not actually people. They're computers. Lots of computers. When you want to buy something normally.
So as we discussed, so I take this example and taking this video to a group of mostly an audience that comes from banking industry. I would say just sacrilege, but I have been using this because across my 5 to 6 years of association with blockchain, I have seen only this video, which so crisply summarizes a blockchain in 2 minutes time, and it has a very powerful message. The message is that what blockchain does, that it brings decentralization or disintermediation. So I like to call it disintermediation, that in certain aspects, and those disintermediation means removal of a third party from between two parties. Not necessarily that it needs to be a bank, it can be a third party altogether, which is a centralized repository. Because banks are not only repositories, they are actually providing a lot of services. They are providing deposit taking and lending services. Record keeping is only a part of that ecosystem. Similarly, it can be processes within the organizations. So it is not necessarily only the organizations, but also entities as well as processes which get disintermediated and by connecting two parties interacting each other on the blockchain. And one good part about this blockchain is, which is again where the regulation and the auditability comes into picture. Most of the people here already will be aware of that in blockchain is not a single record of transaction. So unlike a ledger or a core banking or our accounting ledger where we maintain each and every transaction separately, a blockchain is a chain of blocks of transaction. That's why the name blockchain. So each and every transaction since the time the organization or when the blockchain is started, each and every transaction is linked into the new box which is created, the new block that is created. So it means if supposingly somebody wants to change the data which occurred 6 months back, if they want to change the data, they will have to change the data from today to the 6 months. Unless they reach there, the blockchain records cannot be changed. And that's where the concept of immutability comes into picture, that doing that is very, very costly. So number of us here are accountants by profession, and we will recall that long back when we used to do accounting entry on paper, we used to have rectification entries. Today, so if you make a mistake, you cannot simply delete, you cannot tear apart the paper, you have to pass a rectification entry. The blockchain actually ensures that behavior. So today's accounting system, today's record keeping system, the number of people have rights to delete the records. Of course, there are audit logs and others, but that became blockchain actually alleviates the need of having such sort of a audit trail based system. It makes sure that the data is non-alterable at all, because the cost of doing that alteration is way too high. Even for the hackers, it is very, very difficult to do that. So keeping this video in mind, I would just like to talk about what are the core tenets of blockchain here. So what we discussed here, that there are thousands of computers supporting a blockchain network. It can be hundreds, it can be 10, 20, depending upon the design. Especially in private blockchain, the number of computers, the number of participants is lower. In a public blockchain like a cryptocurrency, Bitcoin, there are really thousands, even lakhs of computers supporting that network. So the trust is into the system instead of a third party. And that's why we sometimes call it trustless ecosystem. And essentially what blockchain is, actually it connects two parties or multiple parties together. And that way, we don't need to have a single point of trust and a single point of, that means a single point of failure as well. So that's the core pillar one of the blockchain. And the second part is auditability, as I mentioned. And that is where our regulations come into picture. That each and every record is time-stamped and immutable. And that time is maintained by a multitude of nodes to ensure that there is no change in the records at all. And the third pillar is what I call efficiency part of it. Because if we look at blockchain, so if we look at Indian banking ecosystem, our major, at the bankers level, major technology change was core banking. which dismantled record keeping at different levels, whether branches or different departments, and brought them all together. The same thing was done by ERP systems in the manufacturing industry. If we look at blockchain, because blockchain connects the banks, it connects the vendors, it connects the manufacturing organizations, and so on. Blockchain is actually connecting all these ecosystems together. And so it's an ecosystem play. And when it is an ecosystem play, what is happening today? That the interactions which used to take a lot of time from organization to organization on a single network, they take microseconds or a milliseconds time, without any need of even sending an email, because all those things you can code into the system. For example, you want to register a lien on the MCA records, which all the bankers will agree that is a very, they have to be very vigilant about that all the lien and charges are all the time registered in the registrar of companies offices. Smart contracts can do that if the banks and the registrar of companies are on the same platform, without any need of any intervention in between. As soon as the lending happens, it can happen. The same thing can take place. In mortgage loans, you can do that with registrar of property. There are so many examples of smart contracts which bring the efficiency. So these are the three pillars of blockchain. And that is where we see that they can be so helpful in the banking industry as well as in the regulatory aspects. And that's where we apply blockchain when we need these three elements. Based on these three elements, one, immutable data, and that's where earlier banks had this view that blockchain doesn't work, etc., because it was tried to apply it across the industry without thinking where to apply and where not to apply. So we say if there is a need of immutable data, which all the banks have, the second part is if you are interacting with many parties and the parties have this history of having a trust reliance issues, because here we will be relying upon the network instead of it. And finally, removal of the intermediaries. So that's the part which we are doing. And based upon that, we have created the commodity finance module. Bhatia sir, before I go ahead, we are at 7 p.m. mark. Would you like me to take ahead from here, or how we would be doing that?
I think if you can summarize it in next couple of minutes, that will be good. Sure. Chitranjan ji, is it correct?
Everybody has come here, and some question answer session is there. So yes, that question answer session will be navigated also today. Please.
Okay. Sure. So what we have done here, that we have to solve the banking industry's major problem of billions and dollars of frauds in the warehouse receipt finance industry, which happens every year in India, outside of India. In India, hundreds and thousands of crore, outside of India, billions of dollars, millions and billions of dollars. To solve this major problem of the banks and also help with their other ecosystems, what we have done, that we have created a blockchain platform for warehouse receipt finance, which has a blockchain attached with digital lending, and also, as Bhatia sir mentioned, a trading platform attached to that. And this entire system is a personless, paperless ecosystem, which, without need of even visiting a bank branch, farmers can deposit their commodity in a warehouse and take loan against that. A trader can deposit the commodity in a warehouse and can take loan against that. And later on, when they need that, they can also sell it on a platform, thanks to the new farm bill which have been introduced. But the core aspect here of using blockchain is that we ensure that there is no lending against a duplicate or a forged receipt, where banks we have seen have lost money earlier, where we use the immutability, the unaltered receipts. The blockchain ensures that the receipt can never be duplicated. It can never be changed. Second part, which is a major concern for the banks, is multiple lending, especially in licensed shared government warehouses. We have seen banking frauds happening in those sectors, and most of the banking frauds in warehouse receipt finance have been in that nature. So by ensuring that the warehouse and the banks are on the same single platform without having a repository in between, we ensure that no such incidents of multiple lending can take place ever. We also ensure that using blockchain, we have been able to address to a very large extent the industry's problem of lending against ghost collateral. Means collateral in the warehouse is, say, 10,000 metric ton and lending is 50,000 metric ton, and so on. Addition to that, we have reduced the cost, and by digital lending, what we have done that we have even made a small ticket loan issuance on the platform very, very much feasible. So we are taking warehouse receipt finance to the farmer's doorstep, as well as with the help of actually with the core motto of reducing the bank's risk exposure, reducing their cost structure, and also helping them reaching the doorstep of the farmers without need of having a branch establishment at the local level, because we get the warehouse onboarded. And what Khata Book is doing for MSME, we by onboarding the warehouses on the platform, we are doing for the warehouse receipt in finance industry, where anybody can take the loan in the warehouse itself. So that is all from my side. Thanks a lot, everyone, for this opportunity, and we will be welcome to answer any question here or later on through any other platform as well.
Thank you, Mr. Ashish. I think your reply to one of the questions which one of my colleague, Mr. CMA Sandeep Sethi has asked, how do we tackle the fraud by the intermediaries? So one of the key things which you actually have talked about is the immutability, which gets created by platforms like blockchain. And another thing is that this immutability also comes from the utilization of the public data sets. As we actually have been hearing UPI and Aadhaar card and various public data sets which are available, including the data sets which are getting published by the government organizations in terms of land record and other records, etc. So when these actually are leveraged, and when immutability is created and trusted environment is created, as Mr. Venugopal was saying basically, then this fraud actually can be tackled by use of technology, by use of public record, and by creating the trusted mechanism and those type of contracts which actually technology like blockchain actually they allow. So that is one. Another question which we have received is in terms of how do we take this to the rural area. So one of the thing which probably is very unique for India is that more or less everyone in India has got one smartphone. So number of smartphone and mobile phone connection in India is around 100 crores compared to 130 crores population. So which is actually almost 0.75 or zero 0.8, and most of the business model which has actually got disrupted and has got changed actually have moved to the smartphone, and smartphone actually has revolutionized the entire employment market as well as rural market. So banks actually, this entire fintech what we are talking and banking new business model what we actually are talking is actually to enable banks to in their journey from being the branch focus, being the internet banking focus, being a mobile banking focus, basically going and going after the customers who actually have changed their residence. Customer no more live at their home, they no more visit branch, they no more come to my internet banking application. Customers are living in WhatsApp, customers are living on Facebook, customers are living in cloud. So how, when customer has changed its residence, so obviously I need to change my method of connecting with customer. And this entire journey is actually a way shown by fintech. So we had a banking 3.0 or industry 3.0, which was an automation, but that automation was not an intelligent automation. Now we are talking about banking 4.0, which is actually getting into self-service, which is getting into the real time. We cannot get into self-service real time unless we build the intelligence which is very specific to the banking industry. One example is definitely blockchain, which actually is trying to build those contracts which are very specific to the banking industry, so on, payments and KYC, etc. But probably this needs to actually go beyond. And in case, as Mr. Venugopal was talking about, that entire disruption which is coming from Google and others. But good thing is that Google and others, they actually have gone and built that entire intelligence. That intelligence is actually having accuracy of 30-40%. If you go and make the searches, you actually get only 30-40% accuracy. But I cannot accept that 30-40% accuracy in my banking business. I need to actually go invest and create my own intelligence which is very banking specific. It is like actually some graduate is coming, some MBA is coming to my office. I actually train him into very banking specific and banking specific knowledge, skills, and templates and functionality, etc. And after banking, I actually train within my bank. If I'm in State Bank of India, what are the procedures, etc. of State Bank of India, and so on and so forth. So actually, FinTech actually has shown us that path. What is the differentiating factor? FinTech are able to create that artificial intelligence, which is very banking specific. That is making the disruption. That is changing everything. That is changing the cost curve. So actually for my book, Banking 4.0, the Industrialized Bank of Tomorrow, I've been researching and interviewing CEOs of the bank. I've interviewed more than 50 CEOs of that book. One of the CEO I interviewed was Madam Bhattacharya, another is Mr. Jagdishan from HDFC Bank. And I keep asking them one question, sir, what will happen if this that revolution of FinTech continues? So as Mr. Venugopal was also saying, that bank has to become a bigger FinTech. So what will happen? Those who miss, they will become the agent of other FinTech. So if I'm a bank, if I miss that taking up that disruption, if I miss that building that intelligence into my bank, if I miss that, what will happen? I will start selling product of other bank. I will start using the technology of other bank. So FinTech actually is showing that path also. FinTechs are white labeled by many of the banks actually as a partner. So those banks who actually miss the bus, they actually are adopting FinTech and they are absorbing them within their own technology framework and so on and so forth. So I think this was a very good insight which we actually received. Our members actually received. Thank to Mr. Basu, Mr. Venugopal, Mr. Ranjit Mishra, and Ashish for helping for giving us insight, for giving insight to our professional colleagues. Chairman sir, back to you.
Thank you. It's a magnificent session we have simply witnessed. And first of all, this is the session which would be remembered in our mind because everybody has given certain insights in the topics. That's RegTech versus FinTech. We deliberately kept these verses, and we are very happy that this has been dealt by all the speakers in their own way, and we are really being mesmerized by their process of discussions. Of course, time is the constraint, but I can say the first personality, Sri Arijit Basu, I have listened to him in various forums, in various Chamber of Commerce program. In fact, our institute also a part of one of the programs. And from that day, I am listening to him. And after listening to him, I was very much after him to come to our platform. Sir, thank you that you have made your time and you have come here. And it is not the first of your time. Now you have to be associated with us because we are going to have, CMA Mohan is one of our members, who is esteemed member, who is always with us and who is always showing us the roadmap. So actually for these particular FinTech issues, will be holding again a solo program, multiple program, panel discussions. Sir, we'll be looking forward for your participation. Because you are a reservoir of experience, you are a reservoir of knowledge. So your knowledge you should have to disseminate for the future generations for whom we are working, sir. So your continuous association with us will definitely help us to go more and more for the cause of the nation building process, because nation will have to adopt this. The future is coming for this FinTech and RegTech like that. And I would be definitely, sir, I would convey another member, whose alma mater is our Institute of Cost Accountants of India, CMA TK Venugopal, who is also my good friend. He has also come here. And in fact, sir, I am looking forward for his contribution to our institutes in various ways as a member. Although they are all working in the banks, I know that 24/7 they are working. But still today, Sunday, he has made it time. I am thankful to him. And another friend of mine, was Ranjit Mishra, who is always being actually rejuvenating my energy for work for this particular BFSIB. We are actually, sir, you'll be very happy to note more than 100 webinars we have organized during this particular period of time in COVID. And a lot of international conference also we have done with the bankers. And ultimately we could understand that in the BFSIB sector, we have to do a lot of handholding with the bankers. Bankers cannot grow unless they have got some support service from the institute like us. And our members are there to support the institutions, all the bankers. And in fact, sir, I am telling you, today all the fintech companies should think for their compulsory recruitment of the cost accountants, because the cost is one of the essence where the cost accountants can definitely help. And our syllabus is also revamped, and our syllabus has included lot many things like artificial intelligence and blockchain technology, machine learning. And you'll be very happy to note that our institute, the first institute who has introduced this SAP HANA, and it is being accepted by various members across, various professional members across India and abroad. And it is our online courses are going on. And we have also introduced recently the diploma in system and security audit course. We have also introduced diploma in forensic audit course, considering the fact that now the system security is one of the most important thing, and cloud computing audit is also very important thing. So we have added cloud computing audit in our system, in our DISA course. That's why our course name is DISSA. I am very much thankful to Ashish Anand that he has given a very good insight. You will be very happy to note that many of the CMAs who are agripreneurs, they are fondly calling them as agriculturists. And they will be very happy to get your presentations. Sir, from the Agricultural Task Force, Institute has got an Agricultural Task Force. And the month of May was hosted as an agricultural month, where our Honorable Minister for Agriculture, Narendra Singh Tomarji came, NABARD chairman came, and all the other, the domain, the people in these universities, IGNOU Vice Chancellor, all came. And we have come out with an agricultural concept note for the doubling of the farmers' income, augmentation of farmers' income rather. And we'll be looking for your help also, because this blockchain technology warehouse receipt, today bankers are also providing finance through warehouse receipt. But how you have shown how the intermediaries should be, ultimately they should not be given any chance. Of course, in India, it is very difficult. I don't know. I will have to learn much more from you, that how you are making it possible. Maybe what is the area, how much geographical area you are covering. Because in the village, in the rural areas, we have seen that bankers are playing a big role in even educating financial literacy of the customers. Indian Bank has come out with an MSME Prerana. Their financial literacy they are doing for the customers. And we have joined hands that from our chapters, we have got 110 chapters. We have got 11 overseas centers. We have got more than 800 support centers. Through that, we have already have our MSME help desk. And we are continuously trying to educate our customers of the bank in a different way, but because they are coming to our support centers and we are helping them. And you'll be very happy to note that not only for CMA or it's a course, and another course Government of India has given from the BFSI skill development, that is CAT, Certified Accounting Technician. We are also educating them on the various fintechs and various, even we are going to launch an Indian Accounting Survey, Accounting Standard course from the very grassroots level, because people have to know what is the actual Indian accounting standard. So we are trying to build up the skill. We are trying to build up capacity development amongst the members. And my profuse thanks to our Sri Mohan Bhatia. CMA Mohan Bhatia is I called him as our resource person. He's the most important resource person of our banking committee. And in fact, now this banking committee has been converted into the BFSI board. We'll be having today, from this discussion, it has been emanated, sir. We are grateful to all that we shall have a, some concept note on the FinTech and RegTech for the benefit of the people at large, not for only professionals. And we'll be looking forward for your participation in that particular launching of the book. So with this, I am really thankful to you. Sir, I will not be taking on much time. We'll be looking for your further participations. I am handing over the session to Indrashi.
Thank you so much, sir. Thanks to all for such a wonderful and informative session. So it's really an honor and privilege to have such eminent speakers on board today and making the event such a successful one. So we are now concluding the program with the Institute Anthem.
Thank you.
Thank you, sir.
Thank you. Thank you all.
Thank you.
Everyone.
Thank you.
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया
असतो मा सद्गमया
तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय ॐ शान्ति